The main driving force for the markets today is the growing escalation of a conflict between Palestine and Israel, which threatens to spill over to other countries in the Middle East. Amidst these tensions, US President Joe Biden flew to the Tel Aviv today and expressed his support for Israel, pledging allegiance today, tomorrow, and always. This geopolitical unrest has cast a shadow over the US dollar. Yet the pace of the dollar's decline is rather moderate as it gains support from a strong macroeconomic data from the United States. Meanwhile, the British pound has been displaying weakness and attempting to rally without any substantial fundamental backup. In this case, the economic data indicates notably, UK inflation remained unchanged, defying expectations of a slowdown from a 6.7% from a 6.5%. This suggests another interest rate hike by the Bank of England before the end of this year. Surprisingly, Eurozone consumer prices slowing from a 5.2% to 4.3% and did not largely influence the market sentiment. The fact is, these figures came in line with the preliminary estimates that have already been priced in by the market. A lot will now depend on the Joe Biden's trip to Israel. Should the president succeed in de-escalating the confrontation, the US dollar could get a significant boost, a scenario that would be beneficial for the US economy. And some analysts, however, remain skeptical, speculating that this Middle East crisis is a calculated move orchestrated by the US before the elections. And the US might have aimed to escalate an age-old conflict only to position itself as the only force capable of cooling down the conflict. If Biden's trip does not yield the desired results, the dollar's correction initiated at the end of the last week might continue. Yet it's still hard to say whether this correction will morph into a full-fledged downtrend. In the technical analysis, the euro-dollar pair has rebounded from the support area of 1.0500 and has almost reached the level of 1.0600, where dollar sales seem to have paused. Securing its position above 1.0620 will allow the euro to develop a further upward movement. Until then, the area between 1.0600 and 1.0620 acts as resistance for traders. As for the pound-dollar pair, it has entered a flat phase, 50 pips above the support level of 1.2150. On Tuesday, the pair did not show any considerable changes. To continue an uptrend amid the current pullback, the pair needs to settle firmly above the level of 1.2230. If so, we can expect a potential increase in long positions with a target at 1.23. In terms of a downtrend, traders will consider going short if the price fails to hold above the 1.2120 mark on the 4-hour time frame. And that's all for now. We keep monitoring the financial market situation. Subscribe to our channel and see you in several hours. We will take a close look at the US trading session.